In a surprising turn of events, China is reportedly mulling over the utilization of yuan-backed stablecoins for the first time, aiming to increase the global adoption of its currency, insiders reveal. This marks a significant shift in the country's stance towards digital assets, previously known for its strict regulations. The State Council, China's highest executive body, is set to review and potentially approve a detailed plan this month, outlining strategies to enhance the yuan's global presence, including measures to catch up with the U.S. stablecoin push, according to sources close to the matter. The plan is anticipated to establish targets for the yuan's usage in international markets, delegate responsibilities to domestic regulators, and incorporate guidelines for risk management. A high-level meeting is scheduled for late this month, focusing on the internationalization of the yuan and the burgeoning trend of stablecoins, which are rapidly gaining traction worldwide. Senior leaders are expected to articulate their vision for stablecoins, defining their role and development within the business landscape. If the proposal for stablecoin usage is greenlit, it will signify a monumental change in China's approach to digital assets. Previously, the country imposed a ban on cryptocurrency trading and mining in 2021, citing concerns over financial stability. China has long harbored ambitions for the yuan to attain global currency status, akin to the US dollar or euro, reflecting its economic prowess as the world's second-largest economy. However, stringent capital controls and substantial annual trade surpluses have hindered this aspiration. Capital restrictions pose a significant challenge to the growth of stablecoins, as market players have noted. Stablecoins, a form of cryptocurrency designed to maintain a fixed value, typically pegged to a fiat currency like the US dollar, are frequently used by crypto traders for seamless fund transfers between tokens. The yuan's share as a global payment currency dropped to 2.88% in June, its lowest in 2 years, according to data from the Society for Worldwide Interbank Financial Telecommunication, SWIFT. In stark contrast, the US dollar held a commanding 47.19% market share. China enforces robust capital controls to oversee inflows and outflows, with select schemes allowing capital deployment in key offshore markets such as Hong Kong. In the U.S., President Donald Trump endorsed stablecoins shortly after his inauguration in January, initiating a regulatory framework that legitimizes cryptocurrencies pegged to the U.S. dollar. Their underlying blockchain technology facilitates swift, borderless, and 24/7 fund transfers at minimal cost, positioning stablecoins as potential disruptors of conventional monetary transactions and cross-border payment systems. Financial innovation, particularly stablecoins, is regarded by Beijing as a potent instrument for yuan internationalization amidst the growing clout of US dollar-linked cryptocurrencies in global finance, insiders say. The specifics of the plan are anticipated to be disclosed in the upcoming weeks, with Chinese regulators, including the People's Bank of China, PBOC, tasked with execution. The sources chose to remain anonymous as they lacked authorization to communicate with the media. The State Council Information Office, SCIO, has not responded to Reuters' request for comment, and the PBOC was unavailable for comment outside regular business hours. Currently, US dollar-backed stablecoins dominate the market, comprising over 99% of the global stablecoin supply, as per the Bank for International Settlements. In Asia, South Korea has committed to allowing companies to introduce yuan-based stablecoins and develop the necessary infrastructure, paralleled by similar efforts in Japan. This development occurs amidst escalating geopolitical tensions with the U.S. and the increasing reliance on dollar-backed stablecoins by Chinese exporters. Beijing's latest strategy follows a recent announcement by a Shanghai regulator who convened a meeting for local officials to deliberate on strategic responses to stablecoins and digital currencies. In a recent interview, PBOC advisor Huang Yaiping mentioned that an offshore yuan stablecoin in Hong Kong is a possibility. Separately, Hong Kong's eagerly awaited stablecoin legislation came into effect on August 1st, positioning the Chinese-controlled territory as one of the pioneers in regulating fiat-backed stablecoin issuers. Shanghai, China's commercial epicenter, is also setting up an international operations center for the digital yuan, according to sources. Hong Kong and Shanghai will spearhead the local implementation of the latest plan. China is anticipated to explore the expansion of yuan usage and potentially stablecoins for cross-border trade and payments with certain countries at the Shanghai Cooperation Organization (SCO) summit, scheduled for August 31st to September 1st in Tianjin. The global stablecoin market, though currently small at approximately $247 billion, according to CoinGecko, is projected to soar to $2 trillion by 2028, as estimated by Standard Chartered Bank.